Well, what we're doing at C3 AI with Microsoft and Adobe is creating the next generation. We have created the next generation of CRM basically through innovation. And what's going on at Salesforce today, and I think it's a fine company, they've done a great job with the CRM market, but they've been growing really not through innovation, but through acquisition, through these, MuleSoft or whatever these things that they're buying all the time. So they've been going through acquisition. And I think if we look at the underlying technology of Salesforce and Force.com, it might be kind of 2002, 2003 technology. So it's a couple decades out of date.
Hi everyone, welcome to Stealing Value. So today I'm going to talk about C3.ai. This is a company that's particularly interesting. It's got partners like Microsoft and Adobe. Actually, with the IPO, Microsoft is also one of the investors in this company. So if we come down to this part here, Spring Creek Capital, if you've ever heard of them, you may not have, is investing 100 million. And then you have Microsoft that's also investing $50 million into this company. They are also doing a normal capital raising at $36 to $38, and this is an increase from $30 to $34 originally, which could value them as high as $4.1 billion. Originally, when I was looking at this company, the valuation was looking around that 3 billion zone. Now it's up to 4 billion. So there's definitely quite a bit of interest in this company, even though we've got Airbnb and DoorDash IPOing in the same week. So it'll be an interesting week when it comes to IPOs. So I'm looking at this company and I'm going, is this one an interesting one? I definitely think so. Why is it interesting? Because there's a guy called Tom Siebel. This guy is a pioneer in a sense in this industry, particularly in this software. So if we read this part there, Tom Siebel is taking on Salesforce and throwing punches at its AI product. It's all marketing and very little technology. So that's definitely something to be throwing at Salesforce. Remember, this is a big giant at $208 billion. So all of a sudden we've got a company that's raising money and being valued at $4 billion going, this $200 billion giant isn't great at what it does, which is quite a challenge. So we've got here, Salesforce has long been the dominant name in customer relationship management software, but the CRM industry was actually invented in the 1990s by billionaire Tom Siebel. So we have this billionaire who decides he wants to create another company, and he's created C3.ai, and he wants to disrupt this industry. So it's very interesting, right? You have a guy who is a billionaire, he doesn't have to do this, but he really likes this stuff and he really wants to come in and make another splash, like he did in the 1990s. It's definitely an interesting one with him coming in and going, as he's put, Salesforce has been talking about AI for a decade. He said, it's all marketing and very little technology. So definitely he's throwing the gauntlet down to Salesforce and going, you're not as good as you're made up to be, or at least what you're perceived to be. So definitely, something for a lot of debate regarding how good Salesforce is. But definitely AI is definitely going to be that future aspect of, things going forward. Whereas with normal like software, particularly with like data management, you normally have to compile it in a manual way, and it can be very time consuming. It can take many hours, whereas with C3.ai, they get the APIs to compile all that data for you, and then basically it only takes you like several minutes to really get the data points that you need. So all of a sudden you've actually got a massive difference where you've got a company that can produce results in a matter of minutes or tens of minutes, or whereas you've got other platforms which will take hours. So all of a sudden you're looking at C3.ai and going, okay, maybe they do have something around here that is pretty interesting, and maybe they can actually disrupt this kind of market, particularly this giant called Salesforce, which is acquiring a lot of companies. The latest one is Slack. So it kind of makes sense, right? For Salesforce, they're so large that them continuing to grow at this rate will be difficult. So they then just basically acquire more technology and more customers by acquiring companies themselves and just consolidating the industry. And yeah, like they just haven't really progressed that much, because when you're a large company, trying to change a lot of things is very expensive. And I guess sometimes it is basically like a fixed mindset where if it's working, why change it? Whereas for a guy like Tom Siebel, he's come in and I guess he's a little bit bored as well, and he's got the money, he wants to challenge this industry, and he's producing a very valuable company at the same time. So this is a guy that sold his company to Oracle back in the 90s for about $6 billion. So, you know, this guy definitely knows quite a bit about building companies. In a sense, you know, he is the pioneer when it came to the software back in those days. So let's look at C3.ai and have a look at their numbers. And, you know, I guess it's always going to be interesting breaking that up and going, are you worth $4 billion? So even though you're doing a lot of, you know, good tech, you know, the numbers still have to match up, or else you're being too pricey. So the current revenue growth is 71%, and 86% of their current revenue is subscription based, which is always nice because it gives you a real good runway on predictable revenue. Addressable market is 271, so plenty of room to grow. But of course, we got to go to the actual numbers, because no point knowing what 71% growth is without knowing the actual revenue numbers. And we can kind of see here that they've been fairly inconsistent in a sense. Like they've grown 88% from 2017 to 2018, and then from 2018 to 2019 was 48%, and then from this 2019 financial year to 2020 financial year they've grown 71%, and then but recently their business has been interrupted, so the growth has been reduced. But we can kind of see in this 2019-2020 part, they have grown about 71%, which is quite, you know, some growth. And at the current run rate of 157 million, their PE value at 4 billion is, yeah, like it's definitely above that 20 times kind of part. Alright, so let's do some quick math, and then we can figure out what. Yeah, so it's about 26 times sales, which in a sense is fairly high. Like, but for what they do, I reckon that they're definitely worth probably closer to that $6 billion mark. Because of what they do, I'd make them comparable to like a company like Palantir that trades at a valuation of like close to 40 times their sales. And then you've got, I guess, Snowflake, which trades much more in terms of the sales multiples, double Palantir's almost, which is, yeah, like again, but their growth rate's much higher. Whereas this one, the C3.ai's current growth rate, I guess, is slightly more than Palantir. So hence why I made that comparison with Palantir being 40 times their revenue. And for this company, I'd say like Palantir kind of has an advantage since they're government contracts. I do like this C3.ai, but we need to see where the durable advantages are. So like even if we did like 30 to 35, like you'd see a considerable upside from this 4 billion valuation. But we have to see what the IPO pricing opens at. But yeah, it's definitely going to be an interesting one. Watching all these IPOs this week. So as the actual revenues show, from 2019 2020, they went from 77 million to 135. And for the recent 3 months, for the end of July 31st, So yeah, like it's for their financial year actually ends April the 30th on 2020. So sometimes that can seem weird because you're thinking about the whole year of 2020, whereas for accounting financial years they end at different dates all the time. So for them it was end of April 30th, and then their new financial year starts for this first quarter. So for their first quarter it was July the 31st. And the increase wasn't actually that high from 30 to 35, but we all understand that during that middle period, things went great. Sales probably weren't accelerating, but the fact that they've managed to maintain their revenue, the subscription revenues, been well maintained with a slight increase, and say professional services, slight increase. I'm not expecting this year to be phenomenal for a company like this. Though we kind of expected that if you're in software, you potentially should perform better. But in a sense, they're enterprise software. Companies are not exactly, I guess, lining up to be spending more money. So yeah, like I guess that's one reason they're not that they haven't been growing as quick. But I expect the growth rate to kind of increase as time goes. And what really is interesting is the cost of revenues. So if we look at the cost of revenues here, out of 77 million, cost is 30 million. Out of 91 million, I'll rephrase that. So out of that 91 million, the cost of revenue is 30 million, which is about 1/3. So they've got really nice margins, which you kind of expect with a software company. And out of 156 million, about 38 of it is cost. So as you can see, like the total costs, even though their revenue basically increased well over 50%, the cost of revenue actually just went from 30 to 38. So you can see the cost really doesn't increase that much as they produce more revenue. Hence why as the company goes on and increases their revenue, the profits actually get much more bigger as they go, because the cost base is very small in that regard, though they are increasing their sales and marketing as they go, and that was increasing from 37 to 94 million. And same with research and development, which you'd probably expect for this company. They're in a growth phase. They want to increase their product range. They want to get more customers. They need to market and sell to more people, and that's very normal. So for the total operating expenses, did increase by almost double, from 97 to 189, but that is normal. And net income, it did show quite a big loss from 33 million to 68 million. But again, this company is raising enough money to at least keep them running for another couple of years at least. Though you can kind of see with this 3 months here, they were actually profitable with a net income of 150,000. It's not much in the scheme of things, but it just shows as their revenue generally increases, that their margins are so incredible that it's actually hard for them to profit in the next year or two. So this one's definitely on my watch list, because the growth rate should continue to pick up from what it was in the first quarter for this year. And then I guess as things go, I see them doing a lot of good things. So if we kind of look at their news part, they're working with the military to adopt AI, and also they're working with Microsoft. So yeah, like there's definitely interesting things about this company that is, in a sense, they're pioneering the next stage when it comes to CRM software. Let me know what your thoughts are on this company. If you have any questions, comments, post below. Until then, good luck investing, everyone.